U.S. tax for foreigners. Oh, okay, this is the other way around. So a foreigner, so a non-resident alien, a non-American with U.S. entities. Tax consequences of that.
Yeah, so I mean, I think it depends a lot on, obviously, on the types of entities, right? If we're talking about a U.S. corporation, you know, I mean, the way the U.S. corporation itself is going to be taxed on its income is not really going to change. I mean, there is, I'll let you talk about the disclosure requirements. I think the biggest thing that you need to look at if it is a corporation is to determine what the withholding taxes are going to be on dividends, right? If it's, for example, owned by, you know, a company in Dubai, then there's no tax treaty, so we're going to have 30% withholding tax. If the owner's a resident somewhere else, the withholding tax may be reduced pursuant to the treaty. If it is a partnership or a disregarded entity, for example, then that's going to necessitate the owner to file a U.S. income tax return to report that. And then again, there may be some disclosure requirements that need to be filed on the U.S. returns, whether it's a corporation, partnership, or disregarded entity, depending on the ownership percentages. I'll let you speak to that.
Yeah, so that is could be like a spider's web. There are many permutations and combinations, and as a result, the disclosure will be unique to that. And Taco, I don't know if she's here. I'm assuming it's a she, but you were very clear about exactly what your situation is. But let's assume that it's a simple C corp. Well, that's your. Well, in the U.S., as you know, companies generally subject to like double taxation, right? Because the company's going to pay tax at 21%, and then you pay tax on the dividends that you receive from the company. So if it is that you are not American, which you've identified yourself as a non-resident alien, to mimic that, there will be withholding on the dividends that you.
Yeah, and then I mean, I would just add to that, right? Like if the company properly did the tax withholding and paid it over to the IRS, then the person who received the net dividends would not be required to file a tax return. If it was not properly withheld, then they would need to file a tax return and pay the tax that should have been withheld. You know, that you have to give a Form W-8 to the U.S. company to let them know about your foreign status. And then if the foreigner owns more than 25% of the foreign corporation, you have a 5472 filing requirement. It carries a $25,000 automatic penalty if you don't file it. And then, you know, the same thing goes, you know, if you have an LLC with a single member, you got the 5472. And I think there's just a checkbox on the K1 of a partnership return.
Yeah, and now additional rules for foreign partners. So there's some additional withholding that's required on that, and there perhaps are ways of mitigating that. So you want to speak to a tax professional about that. And under some circumstances, like if there's no real nexus with the U.S., taxes may not be due, but we do recommend protective returns. So again, it's a Pandora's box. So we need to understand the exact nature of this entity. What is it doing? Is there any nexus? Because there could be income tax consequences, it could be sales and use tax, it could be, so we just need more information.
And I just add, in case for anybody doesn't know what a protective return is, because I'm glad you brought that up, because that's a great idea. So I mean, there's a lot of situations where you might have a non-resident alien that's actually not required to file a tax return. At least you don't think, based on the tax professional's view of it, that there's a return that needs to be filed. But if you never file a return, the statute of limitations never starts running, right? So a lot of times we advise a client to file what's called a protective return, so that they have a return filed to get that statute running, so that once you make it past the statute, the IRS can't come back and argue with you about it.
Absolutely. So with that, we'll probably call it an end to our evening's proceedings. Thank you for.
Sorry, what is that statute of limitations for not filing?
Well, if you don't file, the statute the limitations never ends, right? Because what triggers the statute of limitations is the filing of the return.
So then could I just ask quickly the tax implications of funding a 401k from here and a Roth IRA for income both below and above the foreign earned income threshold?
I'll let you tackle that one. I don't do a lot of retirement stuff.
Yeah, so if it is that you're below the whole idea of at least these tax preferred retirement products is to reduce your taxable income now, right? But if it is your income is below the foreign income exclusion, there is no income to reduce, right? I know there's a whole debate as to whether it should be excluded in an AGI calculation and whatever, but for all intents and purposes, the IRS doesn't like that and they'll push back. So below the foreign earned income exclusion, there's nothing, right? Above the foreign earned income, yes, you can still contribute. However, some of the challenges we see with our clients is finding a brokerage firm that is comfortable dealing with Americans resident outside of the US. So just for an example, I'm not, for example, Charles Schwab, our impression is they don't like it so much, but Interactive Brokers seems to be okay with it. So it really depends on the platform and what their personal rules are. It's not about the SEC or whatever, it's their compliance team and what they feel comfortable with. So hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.